How do I get loan pre-approval for investment properties? Imagine walking into a house with confidence, knowing exactly how much you can borrow and what your options are. That's what getting pre-approval for an investment property can do for you. It's a key step in making your real estate goals a reality. But it's not as simple as applying for a regular home loan. Investment property loans have stricter requirements because lenders see them as higher risk. So, how do you get pre-approved? Let's break it down. First, you need to meet higher qualification standards. Most lenders want a credit score of at least 620, but having a score of 680 or above can give you better rates and more chances. You'll also need a larger down payment, usually between 20 and 30% of the purchase price. For example, if the property costs $100,000, you should plan to put down at least $20,000. Your debt-to-income ratio should be below about 43%. That means your total monthly debt payments, including the new mortgage, shouldn't be more than 43% of your gross monthly income. Lenders also want proof you have enough cash reserves. This means having enough money saved to cover several months of mortgage payments in case of emergencies. Next, gather all your financial documents. You will need to provide 2 years of personal and business tax returns if you are self-employed or own multiple properties. If you are employed, recent pay stubs and W-2 forms are necessary. Bank statements and investment account statements show your available funds. If you already have rental income from other properties, you should provide proof of that income too, as lenders may count it toward your total income. If you received gifted funds for your down payment, include gift letters and legal documents. Choosing a lender experienced with investment property loans can make a big difference. These lenders understand the extra requirements and risks involved. When you're ready, submit your pre-approval application. This involves a hard credit check and review of your financial documents. The lender will verify your income, assets, and credit. Once approved, you'll receive a conditional commitment on how much you can borrow. This pre-approval letter strengthens your position when making offers on properties. Be aware that investment property loans often come with higher interest rates, higher property taxes, and insurance premiums. You should also budget for maintenance and property management costs if you plan to rent out the property. Securing pre-approval is especially important for Black investors working to build wealth through real estate. It shows sellers and agents that you are serious and financially ready. Building a portfolio of investment properties can generate passive income and create long-term wealth to pass down through generations. Remember, strong credit, a sizable down payment, thorough financial documentation, and working with experienced lenders are the keys to getting pre-approved for investment properties. This step sets the foundation for successful investing and helps you turn your property goals into reality.